Hi everybody, this is Scott Miller with River City Mortgage and Financial, and welcome to this week's Market Minute. This is for the week of July 6, 2009. First, I just want to kind of go back and just pay tribute to the troops and support all of the veterans and the servicemen and women that have made that commitment and sacrifice for our country. I really hope that encourage all of you, not just on the 4th of July, but anytime you see somebody who is in the military or ex-military or currently in the service, whatever, take a minute to either go shake their hand or even start clapping for them in public. And this is not a political thing. It doesn't matter what your views are of the war and like that. These are people that have really made a commitment to what the flag, our flag, represents, and they're willing to give their life for that. I know I was not in the military. Very few percentage of our men and women make that sacrifice or commitment. So just take a minute to do that and use the 4th of July to kind of keep that patriotism going. Remember, this information is provided for real estate professionals and trusted financial advisors. It is also intended for our customers. However, it's not an interest rate quote. It's not an interest rate lock-in agreement. We're not soliciting interest rates. We're just trying to provide information on what's going on in the market this week. We've got a lot going on this week again. We just had the shorter-term Treasury notes that were auctioned off a week ago. Now we got the big ones tomorrow and Thursday, the 10 and 30-year Treasury auctions. Our last ones went well, but remember the main purchaser of those has been the Federal Reserve, so we need the Fed to stop buying all that. We need countries to stop doing that. But the problem that we're running into, several things that we're running into right now. Obviously, the auction. Number two, they're thinking of the United States might be downgraded as credit. It may not be worthy. You can live beyond your means. Think of it like a household. You can live beyond your means as long as everyone's working, has a good job and good income. In other words, growing. When our country is not growing, it's very difficult to continue a bigger debt. And right now there's talks of stimulus too. The first $780 billion wasn't enough. So now we may have to do it again, and it's hard to create debt when you have an economy that's possibly recessing. And so as a result, that's going to create a lot of nervousness in the market that we're in. I also wanted to bring up for consumers about locking or floating. 187 out of the last 211 years, interest rates, mortgage rates have been below 7.5%. For whatever reason, we all, in the industry and the consumers, we all try to get caught up, and the rates were in the fours. Now 4 is the new benchmark, and then once it gets to the 5s and 5s, maybe. We need to realize economically we're sitting in a great position. It's below the average or the norm of what it's been for the last 187 years. Now is the time to act on that. Don't get too greedy. Make sure you calculate the difference of a quarter or a half a point interest rate. Remember, the average life of a loan is 4.7 years. We're not making 30-year decisions. We're making shorter-term decisions. Our life will change the next 5 years. You may get married. You may get divorced. You may have somebody pass away, unfortunately. If you don't have kids, you might have kids. Your kids will get older. They may graduate. All those significant things make us rethink our financial picture, including our mortgage. We might do refinancing for add-ons, et cetera, et cetera. So you're making a 5-year decision. Make a well-educated, non-emotional decision. I'd love to earn your business and share with you how to walk that through. You can reach me at 763-509-7400. My email is smiller@rcmortgage.com. Thanks very much. Make it a great week.